Hello all of you. Now let's start with a very important chapter, Levy and collection of tax. So this chapter will tell us what is supply. Basically we are going to discuss 4-5 sections in this. The first and the major one is section 7, which is talking about supply. What do you mean by supply? Because supply is the event of taxation in GST. As I told you earlier that every indirect tax is upon a particular event. When that event happens, the tax is imposed, right? So the event of taxation in GST is supply. Supply of what? Goods or service or both. But that supply has to take place. When the supply takes place, the tax is imposed. So that is the first thing that we are going to discuss here, section 7, what is supply. Then we'll go to section 8. Section 8 talks about mixed supply or composite supplies. That is when there are two or more things supplied together for a composite price. There is one price and you get two or more goods or two or more services or a combination of goods and service. Then the problem arises because the price is not differentiated. So first of all, the price is not differentiated, and secondly, each of these items, each of these goods or the service may be taxable at different rates. So then what rate to be applied on how much value? So that's the problem. So that will be solved in section 8. Okay. Then we'll go to section 9, which is the actual charging section. Actual charging section is section 9, which imposes the tax. Then we'll see section 10, composition levy. Composition levy is an alternate method of charging tax. I'll explain it later on when we'll go there. And we'll also see reverse charge. Okay, so all these things we are going to discuss in this chapter. It will take around 4-5 lectures and we'll go slowly and steadily, but everything should be learnt by heart, learnt by the mind, understood, and you should be able to apply the knowledge that you gain to the practical situations, because the questions that will come on this chapter basically will be practical oriented. That such and such person has done such and such thing. Will GST be applicable to it? So question will not be straightforward on section 7 that what section 7 says. No. Questions will be application based. So that you should keep in mind that while reading these sections, you should always have the practical aspect in your mind, that how this law, how this particular subsection, how this concept is going to apply to the real world. Okay. So with that in mind, let's start. Now the introduction part is given, which is very simple. Article 265, which we saw earlier, of the Constitution of India mandates that no tax shall be levied or collected except by the authority of law. The charging section, hence the charging section, law has to impose, then only it can be collected. So there is a charging section in every law, every taxation law, and here the charging section is section 9. So the charging section is a must, and in any taxing statute for levy and collection of tax, before imposition of tax, it must be shown that the transaction falls within the ambit of the taxable event. So taxable event here is supply, and supply is defined in section 7. So therefore first we'll see section 7, that is taxable event, and then we'll see the charging section, section 9. And that the person on whom the tax is so imposed also gets covered within the scope and ambit of the charging section by clear words used in the section, of course. No one can be taxed by implication. Self-understood. And therefore it is given that taxable event under GST is supply. Supply of what? Goods or service or both. So therefore before moving to the charging section, that is 9, let's understand the concept of supply, that is section 7. So therefore we'll start with section 7. Okay, so now let's start with section 7. For the purpose of this act, the expression supply includes. So the first thing is that the definition of supply is inclusive. What do you mean by inclusive definition? Inclusive definition means that all these things that we'll study here, all these ABCDs, are nothing but examples. These points are just examples. The definition is much wider in scope. And anytime, even if you see the definition of income in Income Tax Act, it is inclusive. Because that is the main scope on which the tax is imposed. So the government cannot confine the scope, it cannot limit the scope. If it does limit it, then you can find ways to get out of that scope and hence avoid tax. So to stop tax avoidance, they keep the definition inclusive, so that even if you do something else, that can also be considered as supply. If it falls within the natural meaning of the word supply, it can also come there, and hence it will also be taxable. Okay, so hence the definition is kept inclusive and not exhaustive. Understood? Purpose is to stop avoidance of tax. Simple. Now let's see what all things they have included here. So these are just examples, right? These are just examples. A, all forms of supply. Now they are giving the example, so they say all forms of supply. All itself includes everything. All forms of supply of goods or service or both, such as. Now again say such as. Such as means examples. Such as, like, such as sale, transfer. Now all these words are used and they have their natural meanings. Like in case of sale, it is sale for money and ownership is transferred. Transfer word is a bigger word, is a wider connotation than the word sale. Sale is a part of transfer. Transfer is a much bigger thing. Now they have included both. So sale is also covered and transfer is also covered. So transfer, sale is also transfer, and transfer can also mean without consideration. Transfer can also include gifts. Transfer means ownership getting transferred or conveyed from one person to another. Now if it is for consideration, then it becomes sale. Now even if it is without consideration, it can still be covered by definition of transfer, right? So transfer. Then barter. Barter means, you know, the bartering system, old times. I bring wheat and you bring rice and we exchange. Then exchange word is also given separately. License. License means the ownership is not transferred. You give something for use to anyone else. Like I've got an intellectual property, I've got a trademark, and I give it to you for use for some number of days or months or years against a consideration. That will also be considered as supply. So supply not only covers transfer of ownership, supply also includes lease, licenses, rentals. All those are also covered. So license, rental, lease, right? So sale is also covered, and allowing use of goods or services is also covered. Or disposal. Disposal means scrapping something. Made or agreed to be made. Now underline these two words. Made. So supply includes all these things. Now all these things can be either made or agreed to be made. So supply includes actual sale, and supply also includes agreement to sell. Supply includes transfer, and it also includes agreement to transfer at a future date. So agreement, do you remember the Contract Act you have studied in CPT? Sale or agreed to be Sales of Goods Act also, right? So apply that logic here. Made means actual, it is done, sale is complete. Agreement to sell means I agree to sell you some goods at a future date. That is also covered. So it can be actual, it can be agreement. Okay, both are covered by the definition of supply. means tax can be imposed on the actual transaction as well as on agreement to enter into the transaction. For a consideration. So clause A defines all the examples and then it gives two characteristics. To be called a supply, it gives two characteristics. Clause A. Okay. What are these two characteristics? Number one, it should be for consideration. There should be consideration. So there should be consideration. Underline this. And in the course or furtherance of business, the transaction, these are transactions, different types of transactions. Now these, to be called a supply under clause A, should be having these two characteristics. Number one, it should be for consideration. Number two, it should be in the course or furtherance of business. So here we'll see the definition of business also in some time to come. Wait for that. In the course means in the regular course, like I am having a shop and I sell goods. So that sale is in the course of my business, right? So in the course means in the regular course of activities. Like I am teaching you, this is in the course of my business. I am giving you the service in the course of my business. So it is a regular thing that I do. So in the course. Or furtherance of business. Now furtherance of business means to enhance your business, to start something new in the course of business. So all adventure stuff comes in the definition of furtherance of business. So if I am selling you something which is not in the course, but it is also in the nature of business, I am starting something new. For example, I want to start a new company, I want to start a new factory. So I purchase a lot of equipments, I purchase a lot of machineries. So while I am doing that, what happens? Is it in the course of business? No, it is in furtherance of my business, right? So furtherance and in the course refers to regular course of activities. Furtherance means starting something new. Okay, so both are included. So whatever goods you purchase in the course of business as well as in furtherance of your business, they will be called as supply. Now let's take some examples. As I told you earlier in the start itself that just by reading this and by mugging up, it will not solve any purpose. You have to understand the application side. So let's take a few examples. Taking these 2 points into consideration. Consideration which can be money or otherwise. We'll see this definition also. We'll see both these definitions, consideration and business. But as we normally understand, we'll start with that. What do you mean by consideration? Anything which you get in return. It can be money, it can be something else, it can be in kind. But if you get something in return, that is called as consideration, right? Very good. So let's take an example. I have a shop, I have a big shop, and from that shop you come to my shop. Now let's take an example, a good example that you'll remember for long. So I am having a restaurant, a big restaurant. Now you are my good friend, you come to my shop, you sit there, and I offer you a few gulab jamuns, right? Sweets. Oh, you are my good friend, just have it. You say that, are you going to charge me for this? I say, no, man, you are my good friend, just have it. Don't worry. Don't worry about the charge, you just have it free of cost. So I gave him 6 pieces of gulab jamuns. It's for free, so he took a lot. Anyways, 6 pieces of gulab jamun. Now, do I charge money for that? No. Is it in the course of business? Yes, I am having a shop. I am having a gulab jamun shop, a sweets shop, and I give you that 6 pieces of gulab jamun. So it is in the course of business. So 2 questions you must ask. Is it in the course of business? Answer is yes. Yes. Is it for consideration? Answer is no. Not for consideration, but in the course of business. So then will it be called a supply in clause A? Answer is no. No. it will not fall in clause A. Now it may fall in other clauses but not in A, because to fall in A, two characteristics must be satisfied. There should be consideration and it should be in the course or furtherance of business, right? Take another example. The same good friend of mine comes to my house, comes to my home, right? And my wife has cooked some beautiful sweets, very delicious sweets. Now you come to my house and I offer you some sweets, of course free of cost. Will that be called a supply in clause A? Again no. Excellent, you are giving the right answers. Again no. Why? Firstly, because there is no consideration. Secondly, it is not even in the course of business because it is at home, right? So nothing, no tax. Okay, so you come to my house, you have your sweets, and then there is a TV kept on a corner table. So you ask me, why this TV is kept on the corner table? I said, no, I am discarding this. I am selling it off in second hand because I am buying a new TV, a new 80-inch TV. And this was 55-inch, the old one. So I am going to discard it. Discard means sell, not discard. So he says, oh, how much price have you kept for that? I said, it was originally 60,000, but now I am selling it off at 25,000. He says, okay, 25,000, I'll buy it. So he takes out 25,000 from his pocket, tuck, 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 tuck. Sold. Now see, is there consideration? Yes, there is consideration. But is it in the course of business? Apply the second characteristic. Is it in the course of business? No. I'm selling my TV from my home second hand to somebody. Am I doing business in selling TVs? No. So is it in the course of business? No. So will it be called a supply in clause A? No. It is not a supply. So no GST can be imposed. So whatever things you sell from your home to a kabadi wala or somebody else, to your friends, to your whatever, garage sale and so on and so forth, it will not be chargeable to GST. Why? Because it is not a supply. To be called a supply in clause A, two characteristics must be there. There should be consideration. Consideration can be full or part. It can be a discounted price, it can be full price, it can be anything. It can be 1 rupee, a nominal value, but there should be consideration. And secondly, it should be in the course or furtherance of business. So if you sell your second-hand stuff from your home, it is not taxable. But if you sell your TV from your business place, like you are having a restaurant and there's a big TV there to watch IPL matches and all, and suddenly you decide to sell it off. One day you decide to sell it off. Will that be chargeable to GST? Yes, because that is in the course of business, right? Or furtherance of business. For doing business, you are using that TV as an asset. So then it will be taxable. Now you may not be in the business of selling TVs. You are in the business of restaurant, but you are using so many things, so many fixed assets, so many things in the course of your business. If you sell them, then it is taxable. So that is the first point clear. First a few transactions are given, followed by two characteristics. Okay? And 2 points. These are the points. Point, actual or agreement. So transactions followed by when the transactions took place and followed by the characteristics. So this first clause A is defined in 3 different zones. The examples, the point and the characteristics. Understood? Very good. Fitted into the mind? Excellent. So let's go to clause B now. Now what clause B will do? Now I'll explain you. This clause A is the main part of the definition. What is supply? Supply is this. But now, what if there is no consideration? Or what if the transaction is there but it is not in the course of furtherance of business? Can that also be termed as supply? So government says yes. In some situations, without consideration transaction can also be considered as supply. In some situations, without course of business can also be considered as supply. So those two exceptional situations are then defined in clause B and C. Okay, so let's see. Clause B says import of services. Now this is one area which you have to be very much aware of, okay, or rather beware of, like those captions you find in front of homes, beware of dogs, right? If you don't take care of that, then you can be bitten. So same way, this word service, because you know that GST is on goods or service or both, but some sections apply only to goods, some points apply only to services, some points apply to both goods as well as service. So this you have to take care of. Like in clause A, what is written? Goods or service. So clause A applies to both goods and services, because this is a general clause, it applies to both. But now see, clause B is applicable only to services and not goods. Understood? So underline this, service. Import of services. Now I'll tell you why goods is not given there, but wait for that. So import of services. So just imagine there's some services being imported into India. For example, what can we take an example? Import of service. Take anything, import of service. It can be an architect sitting in New York, and I, Farooq Haque, want to make a home in Nagpur, India. So I hire that architect. The architect is sitting in New York. He is a non-resident of India. He lives in New York. But through internet everything is possible nowadays. So I hire him to design my house in India, which I am going to build in Goa. So I bought a private property in Goa. It's a big property, 35 acres of land on the beach front, beautiful beach, and I'm going to construct my big residential house over there. Just imagine. Anyways, I'll invite you sometime, don't worry. See, all the laws can be learned by good imagination skills, okay? So we are building a big property there. So I hire that architect and I take service of that architect. Now read this clause B. Import of service, architectural service, for a consideration, means consideration is there, whether or not in the course or furtherance of business. Whether or not in the course or furtherance of business. So even though there is no business, I am importing it for my residence. The architect is supplying service to me in the course of my business? No, but for my residential house. There is nothing business there. There is no business. Still this import of service will be called as supply, just because I paid $2 lakh as fees to that architect. So if there is consideration, there is import of service and there is consideration, then it will be called as supply, even if, see, even if means whether or not in the course or furtherance of business, means business is not essential. Now when I say whether or not in the course of business, what do I mean? Am I talking about the receiver or the supplier of service? We are talking about receiver of service. We are talking about receiver here. So in the course of furtherance of business, you add these points so that you will remember of the recipient. Of the recipient. I'll tell you why. Because in case of import of services, the tax is chargeable on the recipient. It comes under reverse charge mechanism. Reverse charge mechanism applies here. The importer of service, the person who receives the service, the person who is the recipient, is liable to pay tax. Okay. So understood? Clause B is an exception of this point in clause A, the characteristic that it should be in the course of furtherance of business. So clause B says that even if it is not in the course of furtherance of business, it will still be called as supply if there is consideration and it is import of service. Right? Now, as I told you earlier, that import of goods is not covered here because import of goods is not directly covered under GST law. It is governed by Customs Act. So you impose customs duty on importation of goods, and in customs you also impose the GST indirectly in the name of integrated tax. We also call it as CVD, countervailing duty of GST. So on all imported goods there will be a countervailing duty of GST imposed under the Customs Tariff Act. Okay, so imported goods are not directly governed by GST law; they are governed by customs law. So therefore not covered here. But import of services are not covered by customs law; they are covered under GST law. Always remember this point. Import of services are covered under GST and import of goods are covered under customs. Okay, great. Then point number C. Now point number C is also an exception to point number A. A says that there should be consideration and it should be in the course of furtherance of business. But what if there are certain transactions which are without consideration? What if there is no consideration? Will they be called a supply? So in few situations the answer is yes. They will be called a supply even if there is no consideration. So those few transactions are covered by clause C. And what it says? Activities specified in Schedule 1 made or agreed to be made without a consideration. Look, there is no consideration. But still they will be called as supply. Now what are these transactions? So they are given in Schedule 1, which we'll see later on. After this section we'll go to Schedule 1. Okay, so there are few. Now Schedule 1 gives a list of transactions. Those are exhaustive transactions. It is an exhaustive list. Only in these few cases a transaction without consideration can also be called as supply. Okay, not for every transaction without consideration, only for the limited transactions which are given in Schedule 1. Then coming to clause D, it says the activities to be treated as supply of goods or supply of services as referred to in Schedule 2. So Schedule 2 doesn't give an exception to clause A. Clause A applies. Clause A says that there should be consideration and there should be course of business. All the conditions are satisfied. Only thing is that in some situations there might be a conflict. There might be a conflict whether this should be called as goods or it should be called as service. Whether it should be called as goods or it should be called as service. Like for example, I am teaching you. So teaching is a service. But I am not giving you a face-to-face class. I am recording this lecture, putting it in a pen drive and then selling it to you along with the books. So should this package which I am selling you be called as goods or should it be called as service? Question arises. What to call it? Goods or service? So the answer to such queries, whenever there is a conflicting situation, whether you can call it as goods or you should call it as service, those conflicting situations are governed by Schedule 2. So in Schedule 2, government has listed the transactions and said that if this is the characteristic, it should be called as goods, and if this is the characteristic of the transaction, it should be called as service. So that also we are going to study in Schedule 2. So we are going to study Schedule 1, then we are going to study Schedule 2 also. And then moving forward to subsection 2, it says, notwithstanding anything contained in subsection 1. Now what do you mean by this word notwithstanding? Notwithstanding means overriding effect. It means subsection 2 will override subsection 1. Subsection 2 will override subsection 1. So notwithstanding is a very big word. It gives the overriding effect. Overriding effect means that when there are two conflicting provisions, which one to apply. So the one which starts with the word notwithstanding will prevail and the other one will subside. Like husband says, let us go to watch this movie. Wife says, no, 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 let's go to watch that movie. So where are they going to go? Of course, the other one, which the wife says. Why? Because wife overrides the husband. So wife always starts with the word, notwithstanding anything said by you, we shall watch that movie. That's a universal truth. Okay, so let's see. So notwithstanding anything contained in subsection 1, activities or transactions specified in schedule 3. So which transactions, activities or transactions are the same that were given above? Sale, transfer, this and that, all those things. Specified in schedule 3, or such activities and transactions undertaken by the central government, or state government or local authority, in which they are engaged as public authorities, as may be notified by the government on recommendation of the council. As may be notified. So government is going to notify these transactions. Shall be treated neither as supply of goods nor a supply of service. Means no GST, in simple words. So transactions which are given in schedule 3, number 1. So schedule 3 we call as negative list. We'll call it as negative list. So we'll go to schedule 3, we'll see all the transactions mentioned there. They will be called as negative list, means no GST is leviable on these transactions. No levy. So subsection 2, you write down no levy, because they are not supply. No supply, no levy. Simple. No supply. If they are not called a supply, they cannot be a levy, because levy is on supply. And if you say that these transactions are not supply, means there is no levy of tax. Okay, so subsection 2 overrides subsection 1. Subsection 1 says that sale is a transaction chargeable to tax, but subsection 2 says if sale is of this nature which is given in schedule 3, then there will be no levy. Okay, simple. And then subsection 3 says, so all these points we are going to study in detail one by one. Then subsection 3 says that subject to provisions of 1 and 2. Subject to provision of 1 and 2. So subject to is another word. Whenever a section starts with the word subject to, it means that these two subsections 1 and 2 which we saw above are going to override 3. So subject to husband, this is husband section. Subject to permission of my wife, I will come. Means wife overrides husband. So subject to is the husband section, and notwithstanding is the wife section. For remembering sake. There's a topic of interpretation of law in corporate laws. Have you studied that topic? If not, I have put those lectures free of cost on YouTube. You must watch them. Interpretation of statutes. Very interesting topic. Around 4 to 8 marks questions come in corporate laws on that. You can watch those lectures. Okay. So let's see. Subject to 1 and 2. The government may, on recommendation of the council, may means discretionary. It's not compulsory, it's discretion. On the recommendation of the council, specify by notification the transactions that are to be treated as supply of goods and not supply of service, or supply of service and not supply of goods. So this is similar to that schedule 2, what we can say, that things which will be called as goods and things which will be called as service. So it's fine. So that is section 7, very simple one. Now let's just go through the analysis part. Firstly, we saw the generic meaning. Generic meaning means a general meaning, the derived meaning, genetic features of the definition of supply, and that is basically the clause A. This is given in clause A, section 7 1A. That is called as the generic meaning of supply, in which we saw all these transactions. So these are the transactions, different types of transactions: sale, transfer, barter, exchange, license, rental, lease and disposal. Made or agreed to be made, and having two characteristics, that is consideration and in the course of or furtherance of business, right? This we had discussed. So now the time has come to discuss these two definitions. One is consideration and one is business. Let's see, very simple definitions. So first we'll see definition of consideration. Section 2 clause 31 of CGST Act defines the word definition, consideration, and what it says: in relation to supply of goods or service or both includes. So again, the definition of consideration is also inclusive. Again, it means that these points which we'll see here are just a list, are just examples, are just what we can say enumerations, but they don't exhaust the definition of consideration. So consideration can include something more also. Okay, so let's see. A point: any payment made or to be made. So any payment, consideration means the payment. Again 2 points: made or to be made. So made means cash sale, what we call as cash sale, and to be made is what we call as the credit sale. Simple, very simple points. Made means you go to a shop, you pay up the amount and take the goods, so you pay immediately. So consider payment made, it will come in the point of payment made. Or if the other person sells some goods to you on credit, you got 1 month credit, so you are going to pay after a month, means to be paid. Whether in money or otherwise. So consideration can be in money or it can be otherwise, means the word exchange itself, barter, exchange, consideration will be in kind. So money or otherwise means kind, it can be in kind. In respect of, in response to, or for the inducement of. Now 3 very interesting words. In respect of. So these are the characteristics of payment. Which payment will be called as consideration? Every payment is not consideration. A payment to be called as consideration should fall within any of these 3 characteristics. The first thing is in respect of. Second, in response to. Or third, for the inducement of. 3 important words. These are the characteristics for a payment to be called as consideration. Okay? Every payment is not consideration. I give you just some money, that is not consideration. Now it will be called as consideration only if it falls within any of these 3 characteristics. Number 1, in respect of. So let's take examples to understand. I go to a shop, I buy some goods, 10 kilos of watermelon, and then I count the consideration. Now the shopper, the owner says that it is for 480 rupees. So I count 480 rupees and give it to him. So this amount that I am paying is in respect of the transaction. In respect of supply, he supplies the goods, and in respect thereof I am paying the amount. So the amount is in respect of the goods or the service, as the case may be. So when we pay the amount as bargained upon the supply, so there is supply and there is a payment, that will be called as in respect of. In respect of the goods. Okay. Then in response to. In response to is a situation where the goods are supplied to me. The goods are supplied to me. No amount was decided, nothing. Goods are just supplied to me. And then, like the best example I can take is goods on approval basis. You supply the goods to me for approval. Now you give me a time of 15 days to approve or reject. So goods come to me, and then I decide to reject. So if I decide to reject, I'll return the goods to you. But if I decide to approve, I will make a payment. So that payment is called as payment in response to supply. In response means you give the goods. At that time the price was not decided, nothing was decided, there was no obligation to pay, but then afterwards I pay. So in response I am paying. Okay, so in response to. The third word is for the inducement of. This is interesting one. For the inducement of. Now you are a jeweler. Take an example, you are a jeweler and you have one diamond with you, an extremely costly diamond and a very beautiful one. Now you have put a price of $7 million, but nobody is willing to pay that much price, and that diamond is in stock for years together. Nobody is buying, but I want to buy it. I want to buy, and what I do is I come to your shop, I bargain the price. I tell you that okay, I am willing to pay $5 million. You are still bent upon $7 million. I said that, look, this is the last I can give. I am giving you a check. I am writing a check for you, $5 million. You decide. If you want to supply, supply it to me. Otherwise, leave it. So I give you a blank, not blank check, but a $5 million check, right? And I come back home. Now afterwards, when you're sitting in your shop, you look at the check, $5 million, diamond, $5 million, diamond, and you're thinking, should I sell, should I sell, should I sell? So first you say no, $5 million is too less. Then you think that okay, this diamond is lying in stock for years together and I'm not getting any amount out of it. $5 million is also looking good, it's not bad. Stock, years together, nobody's buying. $5 million starts looking good. And a point comes when you decide, okay, let's do it, let's supply the diamond. So you call me and say, okay, I'm ready, take your diamond. So amount that I paid you was not against supply of goods. It was just an advance, right? It was just given to you. But that induces you to sell the goods. That induces you to sell the goods, right? So that is called as for the inducement of. So what it means basically is, in respect of means the amount is paid for sale. There is a direct connection. You give me the goods, the price is there, I pay you the amount. Finish. In respect of. In response to means you give the goods to me and later on I make the payment. In response I make the payment. Now in response can have another example. In our society there was something, there was something called as Guru Dakshina. Right, Guru Dakshina. There was a principle of Guru Dakshina. In old times the teachers used to teach the students without taking prior consideration, prior payment. So they used to teach, and then the student, the disciple, used to give some dakshina to the guru afterwards. So that can be called as in response to. You taught me so well, so now I am going to pay you something. Now it can happen even today. Like tomorrow, if you get 95 marks in indirect tax and you score a merit rank, you may decide that because of Farooq sir I scored this rank, so let's go and pay him $5 million. You can do it. Just believe in you. You can still do it. So if you do that, will it be taxable to GST? Yes. It can be called as in response to. In response to my supply of service. So I have supplied you the service, and in response to that you give me some amount. So that payment will also be called as consideration. Of course we'll see the link between the two. My giving you the service and you're making that payment. If there is an excess, if we can find an excess, if we can relate them, then yes, it will be called as consideration. But if they are totally unrelatable, like if I'm a doctor and I save your life, and then after some years you come back and say that because of you I'm still living and I pay you something, that will be called as a donation or a gift and not consideration. Even for coaching, like you become a CA and then after years and years and years of hard work and practice, you become a big billionaire, and then you come back sometime, oh, and you meet me on the road. Farooq sir, where are you going? I said, just catching an auto rickshaw. Why sir? Oh, I stopped teaching and now I am living a pauper's life. No sir, you gave me so much. Take the keys of my car. So he was riding a Jaguar. He gave me the keys. How can you ride an auto rickshaw? Take my car. Thank you for that. But will it be called as consideration for my coaching class which I taught you 20 years back? No. Then that is a gift, not chargeable to GST. Okay, so for inducement of, so these three words are important. In respect of, in response to, or for the inducement of. What? The supply of goods or service or both. Whether by the recipient, now another point, whether by the recipient, who is paying? Who is paying? Recipient. Whether by the recipient, I teach you, you make the fees, you pay the fees to me. Or by any other person. Any other person, can be your dad, can be your mom, can be your brother, can be your sister, can be your girlfriend, can be your boyfriend, anyone can pay the fees. But shall not include, see, there is one exception, very important point, and you have to remember this. Even in valuation chapter you have to remember this. You cannot include subsidy given by the central or the state government. So if there is any subsidy given by the central or the state government, that will not be included in value. It is not a consideration. Okay, so what do you mean by subsidy? Simple example can be like fertilizers. I am a manufacturer of fertilizer, and the normal price at which I sell a bag of fertilizer, 100 kgs bag, is say 5,000 rupees. But government says that no, you have to give the bag either free of cost or at a very reduced price to the farmers. So government has fixed the price as 1,500. But I'll go into losses. So government says, don't worry, we will give you a subsidy of 3,500. So I sell the bag at 1,500 to the farmer, and 3,500 I receive separately as subsidy from the central or the state government. So the question is, what will be the consideration? Only 1,500, or 1,500 plus 3,500 is equal to 5,000. So the answer is only 1,500. 1,500 will be the consideration. 3,500, that is subsidy given by the government, will not be called as consideration. Means there will be no GST on that 3,500 rupees. Understood? Very good. Then point number B. B says monetary value. Now how to find out this monetary value? That we'll see in the chapter of valuation. Okay, section 15 and the rules. Of any act or forbearance. Act or forbearance. In respect of, in response to, or for the inducement of. Now the characteristics remain the same. In respect of, in response to, or inducement of. Supply of goods or service or both, whether by the recipient or by any other person, but shall not include subsidy by the central government, state government. So the second part of the definition remains the same. Clause A and B are same. Only difference is these two words. Act of forbearance. Now what does this mean? This is in simple words called as one example of this is non-compete agreement. Non-compete agreements. Now see, I'll give you an example. Monetary value of any act. So you are going to do an act for me, again supply of goods. I am going to supply goods to you, and you are going to do some act for me. You are going to do something for me. Now that something is not in kind. You are not going to give me something in kind. You are going to do something. Some kind of act you are going to do because I am supplying you the goods. Now that can be many things. Like for example, I am supplying goods to you and you give an advantage to me which you are not giving to any other person. Like for example, I supply raw material to you and you give me exclusive dealership rights just because I am supplying the raw material to you. Therefore you give me exclusive dealership right. So you are going to act in such a way that you are going to give me exclusive dealership rights so that I can earn much bigger profits later on. So that profit that I am going to earn because of this right that you are going to give me will be considered as value of supply of raw material. So the raw material that I am supplying to you, what is the value of the raw material? What is the consideration for that? Consideration is what you are acting in my favor. So that act which you do in my favor will value it, and that value will be called as the consideration for the raw material. There are so many business transactions which happen in real business where we supply goods and we don't receive anything in return directly, but we get some advantages from the other person. He is going to do something which will help us get some benefits. So that comes here. Any act. Or forbearance. Forbearance means stop from doing something. So this is called as non-compete. Forbearance. Don't compete with me. Don't do something. So that will give me an added advantage. And automatically I'll earn much more because you are not going to compete with me. So I'm going to give you something, supply goods or service, and I'll tell you that don't do that thing. The other thing that you're going to do, don't do that. That's a consideration for me. So that is also consideration. You are not doing something brings an advantage to me. So we will find out the value of that advantage, and that value will be the value for supply of goods. So clear up till now, A and B. Now see what the proviso says. Proviso is there which says, however, a deposit, underline deposit, given in respect of supply of goods or service or both shall not be considered as payment made for such supply unless the supplier applies such deposit as consideration for the said supply. Now take an example of this, very simple thing. Now I'll relate it to what we have already studied. What was given above? That payment can be made or agreed to be made. Payment has two characteristics, made or agreed to be made, right? Very good. So what do you mean by agreed to be made? Agreed to be made means an advance payment, right? It is an advance. So you have to come to my shop, you book the goods, you book a car, you give me a check, you book a car, and after 4 days I'll deliver it to you. So you are making payment for the car, then I'll call the car from the godown, make it ready and deliver it to you after 4 days. So the payment that you make will be called as payment in agreement for the goods. So that is advance payment. It will be called as payment, no problem. But now take another example. In advance there also comes a deposit. There is a concept of deposit also. Like our cars are in great demand, huge demand. There's a huge demand of the car. We have built a super model of a car and there is huge demand across India. So our supply lines can produce only 3,000 cars in a month. But the orders that we have received is in the range of 30,000-40,000. So it's huge. So what we do is we open deposits. We open a deposit counter. Then look, whoever wants to buy a car should deposit 5,000 rupees with us. Just book a car. But we are not selling it to you. We don't know when we are going to sell it to you. We don't know. When your number will come, we don't know. So just give us a deposit so that we are sure that you will buy it. Now we'll go back and start production of the car. We'll maybe enhance our production capacity and so on and so forth. We'll do a lot of things because we know that these are the genuine buyers. They are waiting for our cars. And then someday the car will come and I'll call you up and say that look, your car is ready. Now you bring the remaining amount and take your car. So I am at that point of time, what I'm doing is I'm applying your deposit of 5,000 against supply. Now the car is ready, I'm supplying it to you and I'm adjusting your deposit against the supply. So when I took the deposit from you, it will not be called as consideration. Remember, just a deposit is not consideration because there is no contract for supply of goods or service. Right? It's just an agreement and there is no genuine supply. So it's a deposit. Deposit by itself is not consideration. It will not be chargeable to GST. The GST will be imposed only when I apply the deposit towards the actual supply. So when I say that look, I am adjusting your 5,000 against the car, against the value of the car, that is the point of time when we can call it as consideration. And then the GST can be charged. Okay. So there is a difference in advance payment and deposit. Remember this point. Advance payment is against a supply. So there is going to be a supply or there is agreement to supply, and against that you are giving the money, so that is advance payment. Advance payment is consideration from the beginning. Advance is a consideration right from the beginning. But deposit is not consideration. It is just a deposit. It is not consideration until it is applied. Okay? Very good. So that is definition of consideration and also explained in a simple chart form. Any payment made or to be made, whether in money or otherwise, and monetary value of act or forbearance. These are the 2 points, A and B, and then the other points are similar in respect of, in response to, or inducement of supply of goods or service, or both, whether paid by the recipient or by any other person, but shall not include subsidy. So one point is subsidy, it will not be included. Second point is regarding deposit. So the chart will help you remember the definition of consideration. Then second point is supply should be by a person engaged in business. So now let's come down to the definition of business. In the course or furtherance of business. These are the 2 points. So what is the definition of business? Let's see. Section 2 clause 17 defines the word business. Now this definition is long but simpler. Again, it is an inclusive definition. So inclusive means that all these points that we are going to see are just illustrations. They are examples. They don't exhaust the definition. Business can be even something more than this. So let's see one by one. All simple points which we have also studied in direct taxes, similar to that, business and profession. Do you remember? Right. So any trade, commerce, manufacture, profession, vocation, all the babas and all, they will also come here. All the babas, I will not take the name of babas, but they will also come in the definition of business. Profession means like CA and so forth, so on and so forth, the real professionals. And vocation means anything which is done on a regular scale. Any skill that you use to generate income is called as a vocation, like teachers and babas, munis, and so on and so forth. Then adventure. Adventure means doing something for the first time without knowing the outcome, like starting a new business is an adventure. Wager, the outcome is unknown. Wagering agreements or any other similar activity, whether or not it is for pecuniary benefit, means even non-profit organizations will also be covered. They are also doing business. So if your activity is buying and selling, then it is business, whether you do it for profit motive or non-profit motive. It doesn't make a difference. So profit motive is not a required characteristic. Then any activity or transaction in connection with or incidental or ancillary to A above. So these are the main activities, and whatever activities you do which are in connection with or incidental or ancillary will also be called as business. All the incidental ancillary activities like producing raw material for the purpose of producing the finished goods, or producing intermediate goods for the purpose of manufacture of finished goods. So those are all incidental ancillary activities. Then hiring labor, disposing of raw material if it becomes bad for use, disposing of the finished goods which have become scrap, and this and that. All these things are called as incidental or ancillary. Like selling of scrap is not my main business, but it is an incidental activity, because scrap arises in the course of business. When I manufacture the finished goods, scrap also arises. So if I am selling scrap, that will be called as incidental to my main business. That will also be chargeable to GST. Then any activity or transaction in the nature of A above, whether or not there is volume. Now see, whether or not there is volume means the volume can be high or volume can be very low. Like you make a few samosas a day and sell it, only 4 samosas. But you do it on regular basis and in the course of business with an intention to earn money. So that will be called as business. Frequency. So volume is immaterial, frequency is immaterial. Like you are trading in land. Let us exclude that definition because immovable properties are not covered under GST. Let's take another example. You are second-hand dealer of motor cars. So you don't do it regularly, but sometime you purchase some second-hand motor cars and you sell them after refurbishing them or doing something to it. So frequency is also immaterial. Continuity is also immaterial, whether you continue for a very long time or maybe a very short time, or regularity of such transactions. So all these are immaterial. If the core element is of business, the intention was to buy and sell and make income, make profit, then it is business. Then supply or acquisition of goods including capital assets and services in connection with commencement or closure of business. This comes in the word of furtherance of business, I told you. So normal sale of raw material or finished goods is the course of business. And then when you purchase some machineries, equipments, etc., furniture, etc., for commencement of business, or at the time of closure when you sell off your assets, that will be called as business, also be called as business. To be precise, furtherance of business. Then provisions by a club. Now this is an interesting point. Point number E is different. There is a concept in income tax, and that is called as mutual entity concept. No person can make income by dealing with oneself. You cannot make income by selling some things to yourself. Yeah, right? So this is a concept, and it also applies to mutual entities. Mutual entities means few persons coming together and forming an entity which is not registered. It doesn't have a separate legal entity concept. It's just a group. And that group, the association that we build, does business with the members. Supply some services, supply some goods to the members. So this transaction which is taking place is out of the purview of income tax, because in income tax the principle of mutuality applies, which says that no person can make income by dealing with oneself. So the group and the members are considered as same. They are one. They are not different people, they are same, and therefore even if some profit is earned by the association from its members, it will not be taxable in income tax. Now the question is, does that concept apply in GST also? Like 4 of us come together and make an association. The association purchases goods from the market in wholesale and then supplies it to us in retail. So will that supply by the association to the member chargeable to GST? Answer is yes. Answer is yes. So this clause E, what it does is, it says that provisions by a club, association, society or such body of facilities or benefits to its members, as the case may be, means to its members means club, association or society giving services or goods to its members is also business, and therefore chargeable to tax. And this can be given by way of subscription or other consideration. The consideration which is taken from members can be in two ways: subscription, either monthly or annual subscription, you pay up the amount, or any other consideration, means it can be use basis, it can be per use basis, or it can be a monthly subscription basis. Whatever the case may be, it will be called as supply. So just write down there that mutual entity concept does not apply in GST. It applies in income tax. So when you will study direct tax, you will see a lot of case laws are there that club's income is not chargeable to tax, because club and the members are one and the same. They are not different entities, they are one and the same, so not chargeable to tax. But in GST that concept does not apply. So the goods or services which are supplied by the association to its members are chargeable to GST, unless there are some exemptions given in the chapter of exemption. Okay. Then admission for a consideration of persons to any premises is also business. Admission to a premises for a consideration. So a lot of things come here, like theaters, cinema halls. They sell you a ticket allowing you to enter the hall, right? So all those points come here: cinema halls, theaters, etc. Then services supplied by a person as a holder of an office which has been accepted by him in the course or furtherance of his trade, profession or vocation. So these are in the course of his trade, profession or vocation. Like auditors. Auditor accepts the office in a company. Company office is called as the auditor. So you are a CA, and in the course of your profession you accept the office of auditor and you get audit fees. That will be chargeable to tax under GST. So write down examples as auditors, then directors. You are a professional director and you accept an office of director in company and you receive the remuneration for that. And consultants and advocates, they are called attorneys, and counselors, and so on and so forth. A lot of people will be there. Then services provided by race club by way of a totalizator, a license to bookmaker in such club. So what they do is they give a license to the bookmaker. So the race club itself gives the license to bookmaker, and it also acts as a totalizator. Totalizator means these licensed, the licensed bookmakers will take the bets from public on the horses, and this whole money is then collected by the race club, and the winnings are distributed by them. So the distribution of the winning is called as the concept of totalizator. They collect the whole money, then they distribute it. So the race club provides the service to the licensed bookmakers of distributing the profits or the winnings. So that will be called as business. And the last one says an activity or transaction undertaken by the central government, state government or local authority in which they are engaged as public authorities. So activities which are undertaken by the government will also be called as business. Yes, here it is called as business. Then we'll see the exemptions later on. But yes, they will be called as business. But most of the services which are given by the government are later on exempted. So we'll see the whole list of exemptions in the chapter of exemptions. Then the next point is, however, in the case of import of service for consideration, even if such services are imported otherwise than in the course of furtherance of business, it would be deemed to be a supply. This is the exception. This is 7(1)(b), right? Import for consideration is considered a supply even if it is not in the course of furtherance of business. So here we'll stop this lecture, because in the next lecture then we'll see this, the third point, that is 7.1c, and that is without consideration transactions, which are mentioned in schedule 1. So this whole schedule 1 is a long schedule. This we'll do in the next